I'll be showing you an extremely easy option strategy that you can do on a stock that you think is going to rise in the near future. So for this example, I'll be showing you on Zynga. So if we look at the past trading history, we can see that Zynga has been falling. Look at the past month. It was at about 918 on April 6th, and now it's at 833 on May 5th. So we can see the past, here's the past month. So it's been falling down. It's just, all it does is keep falling down. Let's say that I heard some news about Zynga. Maybe some reports came out and they did well this quarter, and I think that they're going to start rising up. So this is where I would put this strategy into place. I'm going to go to Trade Zynga Options. We're going to come over here. And so the first things we're going to do is we're going to look at Zynga. So we're going to look at Zynga, and we're going to come down here. And so what we're going to do, this one involves calls. So let's come under the share price here for this example. And so first thing we're going to do is we're going to sell a call right here. So let's sell a call right here at the strike price of $7.50. So we're going to sell one there. And then we're going to buy two calls above it. So for this example, I'll just go up one to the strike price of 8. We're going to buy, click that. Now I'll show you how to edit this to where we can buy two, because right now it just says we're buying one. So you're going to come down here, it should say call credit spread for right now. Click this drop down arrow, click on custom, and then right here where it says buy, we're going to switch this from 1 into 2. So now it'll say custom because it'll switch to something a little more complicated. So if you come down here, this is what it should look like. So your max loss should be limited right here at this dot of negative $59. And your max loss is at the exact 8 price point because of the calls that we sold at $8. So if you want to move around your max loss point, you're going to move around where you're selling your calls, and that'll move this max loss around. So you see right here is where Zynga is currently trading. Let's say I think it'll get to, oh, and by the way, we chose the expiration date of May 13th, which is about 8 days away from right now. But let's say by May 13th, I think Zynga is going to be trading around $9. So it's at $8.33 right now. Here we have at about $9, and we'll be up $41. And so let's say I think it'll hit, $10. You can't see right now, but I'll show you how to look at where $10 would be, what profit that'll get you. And so yeah, so let's move this around a little bit. Let's change it up a little, and let's see. So now let's sell this one right here at the $7 price point, just to show you what it looks like if you move it around a little bit. And we'll buy two right here. Again, we only bought one until we click on this arrow, click on custom, go to buy, switch this number to 2. There. So now the current price that it's trading at is a lot closer to the green. Like, it only has to move just a couple cents to start being the profit. But if it happens to keep going lower, our max loss is now higher this time. So now the max loss is at 87. But like I said, we would only do the strategy if we are pretty sure that Zynga is going to move upwards. So that's not the biggest deal ever. You can see here if it moved to $9 this time, we'd be up about $62, $63. Yeah, about $62, $63 this time. So you get more profit, but you also lose more. So it depends on where you want to move this around, and you can play around with it. But we're going to come over here to Option Strat and look at this a little bit better. Enter the ticker symbol that you chose for your stock. We chose Zynga. Make sure you have the correct expiration date chosen. Come over here to Build, and we're going to click on Call Ratio Back Spread under Ratio Spreads. So we have Zynga, and then all we do here is we're going to enter this into Option Strat. So we sold a $7 call, just one of them. So we come over here. The sell is on the bottom, and it was $7. There we go. And then we bought a $7.50 call twice. So if you come over here, buying is on top. Also, you can see the little times 2. We bought a $7.50. So there we go. We can see that now. So now let's move the chart range around a little bit to $9 like we predicted. So there. Now you can see $9. So we see $9 right here on this left side. If it's at $9 at 2 p.m. on Friday the 13th, which is the expiration date we chose, then we'll be up $63. And you can see right here, this dotted line to the right of my mouse is where it's trading. So you can see exactly where Zynga has to go by what time and what day of the week for your profits to see your profits. And so I definitely like using option strat for all my options trading because I can see, day by day, time by time results and the pricing that Zynga has to be at for this to happen. You can move around the implied volatility to see how that'll affect things. But right now, we'll just reset it to what it is at now. And so, yeah, I like to use this strategy on options that I think we're going to rise, options, stocks that I'm bullish on. If you're curious about other option strategies, make sure to check out my channel and subscribe for more videos like this one. And yeah, thank you for watching.